In today's video, I want to show you how the Federal Reserve plans to handle the stock markets, inflation, and interest rates. So I'm going to show you footage from Jay Powell, Chair of the Federal Reserve, and this is him speaking last week. So let's start with this question. So this one is, if the stock market crashes, will the Federal Reserve come to the rescue? So I'm going to show you this 1-minute clip.
Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning. Conditional on being in such a challenging situation, markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
Okay, so Jay Powell, Chair of the Federal Reserve, says that the Fed will not rescue the stock markets as long as the markets are functioning. And this is what I suspected before, that if there's a correction, if there's a bear market, then the Federal Reserve is not going to intervene. But if there's a stock market crash, like a collapse, then in the situation where things are not functioning, then I believe that the Federal Reserve will have no choice but to rescue the markets. I mean, again, that's my opinion, but you can tell me what you believe. And if the bond markets, so if the bond market becomes dysfunctional, then obviously the Federal Reserve will have to rescue the markets, which would save the stock market as well. Now, I want to show you this video clip. The next Federal Reserve meeting is on May 7th, and the big question is whether they're going to cut interest rates or not at that meeting. And Powell says, so you're going to see this, that he wants more clarity before making a decision. So the way I interpret that is that they're not going to cut interest rates on May 7th. So please take a look and you could judge for yourself.
For the time being, we are well positioned to wait for greater clarity before considering any adjustments to our policy stance. We continue to analyze the incoming data, the evolving outlook, and the balance of risks. We understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. We will continue to do everything we can to achieve our maximum employment and price stability goals.
Now, I want to show you this video clip of Jay Powell talking about his expectations of Trump's policies. So in a nutshell, I mean, you're going to see it. He says that he expects no progress on inflation this year, and he expects the rate of unemployment to go up. So please take a look.
Where we are now, again, to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. So that's the strong likelihood, and my hope is that we'll get through this and get back. Well, we're always going to be aiming for maximum employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year, and then, or at least not making any progress, and then we'll resume that progress as we can.
Okay, so you just saw it for yourself. Powell expects the economy to weaken, which includes the labor markets. When it comes to inflation, he said no progress there, possibly even getting worse. All right, so in a situation where the economy degrades and inflation goes up, I mean, that's a stagflationary environment. What is the Federal Reserve going to do? In a nutshell, so you're going to see this, Powell basically says that if they need to choose between fighting inflation or rescuing the labor markets, then they're going to try to fix the bigger problem first. So please take a look.
Now, given that we're talking about the future, you may be confronted in the not so distant future with both higher levels of unemployment as well as potentially higher inflation. And of course, the policies that each one requires could be different. You talked a little bit at the podium about how the Fed would see these two and how it would address it. Just giving you a chance again to elaborate on that.
Right. So most of the time, when the economy is weak, inflation is low, and unemployment is high, and both of those call for lower interest rates to support activity, and vice versa. So most of the time, the two goals are not in tension, and they're not really in tension now. The labor market is still strong, but the shock that we're experiencing, the impulses we're feeling, are for higher unemployment and higher inflation, and our tool only does one of those two things at the same time. So it's a difficult place for central banks, to be in terms of what to do. And so the best we can do is we actually have a little provision in our consensus statement, which is the thing that we vote on to embody how we approach these questions. What we say is we will look at how far the economy is from each of those two goals, and then we'll ask, might there be different paces at which they would approach those goals? We'll look at those things and think about them, and we'll make what will no doubt be a very difficult judgment. Again, we're not experiencing that now, but we could well be in that situation, as I mentioned in my remarks.
Now, I want to show you this video clip. And if you've been watching my channel, this is nothing new. This is not going to be a shocker. So Jay Powell gets asked about the debt crisis. I've spoken about the great melt-up. I've spoken about the debt crisis, and just look at how he responds, and you're not going to be surprised.
You mentioned amongst the issues you were focused on was the U.S. fiscal situation. Well, clearly, U.S. sovereign debt continues to rise. And what are your thoughts on the longer-term implications for interest rates and economic stability? How much further can we go in terms of national debt before we cross a line that might be unsustainable in the long term?
So the U.S. federal debt is on an unsustainable path. It's not at an unsustainable level, and no one really knows how much further we can go. Other countries over time have gone much farther, but we're now, we're running very large deficits at full employment. And this is a situation that we very much need to address. Sooner or later we'll have to, and sooner is better than later.
So that was Jay Powell speaking at the Economics Club last week. And to highlight what I took away from this presentation, here it is, that the Federal Reserve will not cut interest rates in May. Again, that's my interpretation. To expect higher inflation in 2025, expect higher unemployment in 2025, and the Federal Reserve will be reactionary. I mean, they're definitely not going to be proactive because they're going to be data dependent and thereby reactionary. But I just wanted to show you this coming from the source. And let me know what you think. Please subscribe. I'll keep you updated on this whole situation. Thank you for the support, and I wish you a very nice day. Take care.